All right, guys, so 2023 was completely chaotic and crazy, just like 2022 was. But let's talk about what 2024 has in store for us. And for that, I turn to the experts, which of course means Wall Street. So let's see exactly what they think is going to happen. And let's see, is it true? Is it not true? Is it actually plausible in the first place? Or is this just Wall Street being ridiculous and trying to take your money again? And all the other things like that. Let's just jump into all of it right now today, right after you hit that like button, if you like getting the truth without the hype. And guys, the biggest percentage discount ever for my group ends this weekend, this Sunday. So make sure you get your spot before that expires. If you want 5 courses for free, you want to be able to jump in my DMs anytime you want, talk to me, jump on our live Q&As, be a part of the best 6, 7, and 8-figure Discord, be able to use our stock analyzer tool for free. And there's so much more things coming, guys. You want to make sure you're a part of this, because I'm not going to do a sale for a long time, I promise. So make sure you jump in and get your spot now, because when it closes up and it goes away, that higher price stays forever. And if you truly want to be financially independent, or you just want to retire early, actually get back on track for retirement, make sure you check out the pinned comment down there, where my new channel, where that's all we discuss is financial independence and retiring early. It's the pinned comment down there. Check it out. Make sure you're subscribed there so you get that content. If that's one of your goals in 2024, that's the place to go to get that content. All right, let's jump into this video right here and see exactly what Wall Street has for us this time around.
Let's get some insights in the news shaping the markets. For that, we welcome in Peter Tuchman is with us, senior equity floor broker at Trade Moss. Thank you for being here. So I couldn't believe it with PCE. That's the Fed's favorite, and that comes in negative. Inflation falling in the U.S. for the first time since 2020. So how do you think the Fed feels now?
You know what? Look, I think their action. Look, this is
all right. I think we've all seen that guy before. Tell me he doesn't look awesome. Tell me his vibe right there going on TV. I can't even remember the name of the brand, but the alligator brand on the shirt. It's just awesome all the way around. So strangely, I think I trust this guy more than I do the vast majority of Wall Streeters out there in their, $5,000 suits and, fancy shoes and all that good stuff. This seems like a guy I'd much more be willing to listen to, and definitely more want to hang out with this guy a lot more than some of those Wall Street guys. Come on now.
they run off of historic data, and they've obviously never had to deal with what we went through in the last couple of years, right? Their approach has been so radical. 18 raises of 25 or more to a level of 5% and change in it. And all you can do is, I'm an evidentiary person. The evidence tells us that what he's doing is working in all respects, to the point where I think it's notable that in his last meeting this past week, he actually tossed out there the idea, even though we're not completely maybe done raising rates, because that was not completely locked out in stone, but he did talk about Q2, Q3, where we may be cutting rates. So the job that he's doing works. The market is responding favorably. I think it's really important. I've been thinking about.
Yep, it's a point that I really can't argue there. I'm not going to go on a limb and say the Fed has been perfect the whole time, because clearly they have not. Multiple times they've screwed it all up. They screwed up the inflation thing to begin with, all the way around. But to say that what they've done is not effective is just not true. The market has rallied. Earnings have stayed strong. The economy has stayed strong. Every single indicator, the labor market has stayed strong despite those raises, despite everything else. They have managed to not really break anything yet significantly, and specifically with the economy. So far, and we're well, a year plus into this playbook now, it has gone remarkably well for the Fed in regards to their plan and what all they've done and what all they put in action there. So he's right. As much as I hate to admit it, and as much as I don't like the Fed, just like all the rest of us don't like the Fed, I can't say that what they haven't done has not created an environment where we have not fallen off the edge of the cliff like everybody was predicting.
Last couple of weeks, think about the year we've had, right? What a perfect opportunity. Thanks for having me on, because to look over the year we've had. We've had a major banking crisis. We've had 2 wars. We've had months and months, year and a half and change of interest rate raises. We've had every possible challenge into the marketplace, plus all the doomsdayers talking about recession. Yet the market here, a week before the end of 2023, and we are trading less than 1%. We are at record highs in the Dow. The Russell just went, in 46 days, went from a 52-week low to a 52-week high. That's never happened before.
Wow, yeah, that is pretty crazy. Obviously, he said it's never happened. He's been in the market a lot longer than I have, obviously. Never heard of that either. So yeah, just ridiculous the way the market kind of ended the year. I know it says pre-recorded there at the top. That's obviously the reason why he's kind of talking about the end of the year not happening yet, obviously. But yeah, wow. Can't say it any better than that. That's just a perfect example there of the entire market being pulled up. Not just the Magnificent Seven or whatever the heck people are calling them now, propping up the market. Everybody else is catching up as well, which of course is a good sign for the market overall.
That means that the breadth of the rally, look, as long as we see the fabulous seven take the market up, which a lot of people say, oh, what's the big deal? It's a rally, 7 stocks are going up. But once you see the Russell start accelerating in that level, that means that it's a very wide breadth rally. Small cap, mid cap tech rallying significantly. So look, the market's telling us what it thinks of all that info.
Look, I know you can't give us exact numbers, but are you surprised to see many of the strategists with S&P targets next year for 5,000 plus on the S&P?
I'm not surprised. Because
does that seem doable to you?
I think, you know what, look, it's amazing. Think about all the different, there are people still on the sidelines. There are people in cash. There are people who are short. There's this whole plethora, to use an SAT word, of people out there with such what's the word? You know, they're so convinced about the negative impact of the market over the inflation and all that they're not buying into this yet. And so as we get to the point where we start lowering rates and we get through the new year and all that, that's going to be like a slingshot. That's my gut. I mean, there's a lot of money still to be put to work.
What about
Yeah, I can't argue there. There's, I forgot what the exact number was now. Several $1 trillion. I can't remember if it was 4 trillion is what I'm wanting to say it was, but again, don't quote me there, maybe off on it. But several $1 trillion just sitting on the sidelines waiting to come back in. And as those bond yields start to shrink, because obviously as the Fed starts to lower the rates, those, it no longer makes any sense to put money in the money market and a lot of other places. A lot of you guys know, you're up 100+% this past year in regards to stocks. It's not like those folks with a lot of money aren't looking at that and going, yeah, okay, maybe I should be back in the market. And maybe they're not looking at, obviously they're playing a different game. They're playing wealth preservation at that stage. But, you start looking at 3 and 4% versus other folks, making 8 to 12% very, very conservatively. And obviously like last year, people making 30, 40% just by being in index funds, definitely changes the math and the thinking on some of those very, very large bundles of cash that are on the sidelines there.
Rally. I mean, let's just talk super near term.
I mean,
what do you think? Are we in it?
I think we're totally in it.
Did it start? I mean, we're 8th week of gains.
So, I mean, look, I
what
don't.
about
never
this
really
next year and into the new year?
I've never really analyzed it, whether Santa shows up at the end of November or he's a mid-December guy.
Right.
How long he's staying with us this year. It's been clear. Everyone said November would be bad. We had the best November we've had in years. December, okay, well, now it's finally going to be bad. We have I think it's notable that this past Wednesday, we had a weird anomaly. We had this day that was like, not the rule, it was the exception to the rule. If you remember,
if
you were here.
Day. Yeah.
Right, so
March,
suddenly at 2 o'clock, the market rolled over aggressively. We sold off 80 handles. Now, that was significant. So that was, and I've tried to analyze, that was either a margin call, that was either a massive option play, that was either some fund that was liquidating, whether it was redemptions. You don't know what it was. But if the market, look, there are people way smarter than me who, if they're watching this market and they felt that we were in trouble, they would have sold this a long time ago. Every opportunity, any pullback in this market we've seen has been rebuffed with a rally.
So that right there, just kind of as he kind of explained the reasons why we possibly could have seen a downturn. This is a guy on the inside who has an inside track on what's going on in Wall Street, and even he doesn't know. So that's why whenever you hear narratives, you hear folks out there telling you, oh, this happened because of this, and this happened because of that, and oh, the short sellers are doing this and this and that. Look, nobody knows in the end. You don't get actual real data. That stuff is very, very much confiscated or confiscated. I don't know what the word is. Anyways, hidden. Let me use an easier word that I can actually pronounce. That stuff's hidden in the background. We don't know, and you won't know for months until afterwards what actually happened. So that's why I stay out of all that short-term speculating, trying to figure out all the short-term games. That's why traders lose so much more than they actually win. And that's why trading is so hard, because there's so many different things that can happen that you don't know about, you have no indication on, and you won't know until the way, way, way after the aftermath of it, making it infinitely harder there. So don't try to speculate. Don't try to figure out what's going on, or why did Tesla move this way, or, why did, Google move this way, or whatever the case is. Even the pros don't know what the heck's going on when those type of moves happen. They just know that they happen and they're reacting to it appropriately.
There's been a lot of sort of questions as to why a day like that happened. And one of the things I had heard was that with the selling, right? More selling,
right.
And then the algos kick in and you hit certain lines and you sell. The difference was those buyers that had all that cash on the sidelines and they just didn't step in.
They did not step in.
And where are they? And that's the question.
Okay.
Where are they? Maybe are they just away for Christmas? They're done. They're sold. They're finished. Why didn't they step in when you talk about 80 handles? If you liked it before, you really like it when it's down big time, right?
I agree with you. It was an anomaly. Okay, they could be in St. Bart's on vacation. We do know that at the end of October, mutual funds shut down. At the end of November, hedge funds shut down.
Right.
And so we're left sort of in the corridor here in December. So the market may have these odd anomalies, and it's surely not the rule. It's the exception to the rule.
Right.
Where were they? I don't know. If I was a buyer and I was sitting on some cash and that happened and I was not able to identify why it was happening, I would once again sit on the sidelines. I rather in this market, and I see it with my customers, I rather buy into a rally than try to catch a falling knife, right? Because this whole amazing building that we're in and this market, which is just so robust, and the consumer in good shape and all that, can literally be turned around on a dime. We know that, right? One bad piece of news, one more war, one more crisis, if it gets some traction, can disrupt this whole market. We know that.
Right.
So just remember, he's speaking from a trader's perspective, not a long-term buy and hold investor's perspective. So I would actually feel the exact opposite as he did there. I would have been buying that day if any of my stocks fell into my buy range. No question about it. So different type of investor, though.
I think the buyers are they're just being responsible. They're looking at the whole story.
Finally, a piece of advice to somebody who wants to put some money to work and say, hey, I'm interested in this market. What should I do? Is it stocks? Is it bonds? Is it both? Is it certain sectors? What do you tell them for 2024?
Okay, look, in a market that we've seen over the last couple of years goes up and down thousands of points. The moves we see in intraday used to take generations to happen. So I kind of tell people there's no bad time to buy a market. There's a bad entry point into the market. That don't sit around and wait for some event to happen to get in. Just get in and start small.
Right.
Stocks are a wonderful place. There's a lot of new people are trading futures these days if you're a trader. But if you're an investor, there's some very attractive equities in here. I'm really surprised by Nike. And what we're also seeing is an overreaction. When they love a stock, they love it with all abandon. But when they don't like it, like we're seeing last night with Nike, I was there watching the earnings. We were doing a Q&A about markets yesterday, and the expected move in Nike yesterday was down 7 or up 7, depending on the earnings. It was trading down 16. Well, that's significant. Nike's a real stock.
Yeah.
So whatever you're seeing is trading in an exaggerated fashion.
Yeah.
So.
Yeah. But overall, it sounds like you're more positive.
I definitely am more positive.
Okay.
Yeah.
Peter
You gotta be
Tuchman
positive.
of Trade Moss. Great to see you. Thank you so much. Appreciate it.
All right, so there we go right there. Obviously, I think that guy's kind of a character. Pretty decent interview there, especially for a trader, and I like the way he kind of there towards the end kind of spoke to investors versus traders. But as you see right there, nobody has any clue as to what's going to happen in these markets, short-term, long-term. We are seeing more exaggerated moves. I think that's just a product of algorithms and just obviously the more Wall Street moves money, the more money they make. Then it's not about making money in terms of gains. They make money on, the amount of money they bring in and a lot of other things like that. So they want as much volatility as possible. That way they can make more money. And that's just, I think we're seeing that as the market grows, it allows for more and more of that to happen. But as far as 2024 goes, you guys know, I just released my plan yesterday on a video there. You guys know exactly what I think. I'm going to continue doing the same exact thing that I do day in and day out, year in and year out in the market, and be consistent and be that long-term buy and hold investor. So for me, every year is a good year in the stock market because either it gets beaten down and I get a bunch of steal deals, or stocks run and I got to work a little bit harder to find deals, but I'm still able to find some good deals. And over the long run, I have made a ton of money doing this, and I see no reason why that's not going to continue into the future. So that's exactly what I'm going to do this year, just like I talked about in my video about my plan yesterday. And guys, the biggest percentage discount ever for my group ends this weekend, this Sunday. So make sure you get your spot before that expires. If you want 5 courses for free, you want to be able to jump in my DMs anytime you want, talk to me, jump on our live Q&As, be a part of the best 6, 7, and 8-figure Discord, be able to use our stock analyzer tool for free. And there's so much more things coming, guys. You want to make sure you're a part of this. because I'm not going to do a sale for a long time, I promise. So make sure you jump in and get your spot now, because when it closes up and it goes away, that higher price stays forever. So definitely check it out. It's also the pinned comment down there. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.